Hello all and welcome back. I hope you're all doing really well. Thank you again for the love and support on the most recent video. Seriously appreciate it. If you aren't subscribed, consider doing so, as there will be plenty more videos coming from me regarding cryptocurrency markets and Hedera tutorials as well for the upcoming DEXs, dApps and projects, all built on top of the Hashgraph ecosystem. This video will be covering some more Hedera related news, and I'll also round the video off talking about Stader's new unstake feature and quickly just running through the different options and how the process will now function over on that platform. Kicking off the video, let's take a quick look at the markets today, some of the news and what's been happening. So it shouldn't come as a surprise to many of you that funding received by cryptocurrency companies has continued to increase despite the fact that we've had major price decreases over the last, well, since the beginning of 2022. Funding will continue to enter the space, and jump crypto's head of investment has backed up this. So April, we saw $6.8 billion, May, $4.2 billion, and June, $3.6 billion of capital enter the markets for development. So still a serious amount of money flowing into not only the space in general, but particular projects in order to help drive them forward, especially as we see more enterprise adoption begin to take shape over the coming weeks, months, and years. Bank of America as well, who has assets under management of $1.6 trillion. Crypto winter has not frozen investor interest in the industry. And again, you shouldn't have had to have been told that by Bank of America to know that the interest in cryptocurrency and the space in general is not on the decline. It's only the prices, the relative prices. And a lot of that as well is because of that institutional money that's obviously de-risking portfolios on behalf of their clients. You know, they're in the game effectively most of the time in order to turn around a profit. They're looking for that return on investment. The general sentiment in the cryptocurrency markets is as strong as ever, and we are seeing use cases upon use cases come out of the woodwork and show how they can actually benefit traditional industries in order to help revolutionize the way business takes place. We've also got the number of addresses or Bitcoin addresses holding at least one Bitcoin reaching another new all-time high. 873,043 addresses now holding one Bitcoin. So we can see that some of the smaller, I guess we can call them whales because it's still $20,000 for a Bitcoin, but retail and smaller investors across the board are still accumulating cryptocurrencies wherever they can, and this is reflected in the number of single wallets holding greater than or equal to one Bitcoin. Some other major headlines as well that hit the news today and over the last couple of days is FTX is reportedly intending to buy Robinhood, and then Hood stock price as a result of that has soared 18%. So according to a recent report by Bloomberg, FTX crypto exchange was planning to purchase Robinhood, the popular stock trading app. The news has caused Robinhood shares to add 18% to their price. Now, after the news boost slowed down a bit, the company stock is trading at $8.88. As stated in the aforementioned report, Robinhood has not received a takeover request yet from FTX, as the crypto exchange is yet to make its final decision on potential acquisition. In the meantime, Robinhood stock continues to blah, blah, blah. Regardless, this would be, again, fairly bullish for the cryptocurrency markets. If FTX does acquire Robinhood, it'll obviously acquire the ability as well to have equity trading on whatever platform it effectively gets absorbed into, as well as the ability to potentially expose some of those Robinhood customers to some more of the features that the FTX platform has, more coins, etc. Exposure to the cryptocurrency markets would again be a nice piece of sentiment and onboarding or on-ramping for potentially new customers or investors, whatever you want to call them, into the cryptocurrency markets. Interesting thing here as well about Shiba Inu. So the burn portal hits another significant milestone in the amount of SHIB being burned. So SHIB enthusiasts have barely finished celebrating a new community milestone when their beloved cryptocurrency project brought them more good news. So apparently now there is a way to effectively burn portions of Shiba. Not something I follow too much. I'm more heavily interested in utilitarian-based projects that can actually provide utility for either small developers or large-scale enterprises. Genuinely believe the majority of the projects that will survive over the long term will be those which have real use cases and the ability to be adopted by the masses, instead of effectively meme tokens that are only doing well at the moment because there's a fad backing them up. They're being propped up by the next person that wants to turn around a quick profit. There isn't anything that stands out particularly about that chain, and that goes to that holds true for the majority of the cryptocurrency space. Something like 2,000 projects are listed on a CoinMarketCap, and realistically, only the top 50 to 100 projects will be here over the next 5 to 10 years. The other sort of 1,900 projects will fizzle out and disappear because they have no purpose being around. We can also see 18 million worth of XRP is now controlled by the largest Binance Smart Chain whales. So the top 500 Binance Smart Chain whales now own XRP worth $18 million according to Whale Stats. One of the top assets held by this group of large investors is the XRP token wrapped on the Binance Smart Chain, so wrapped XRP, formerly known as BSC. In response to the tumultuous trading action seen since the beginning of 2022, whales have been actively accumulating and growing their holdings by purchasing at a bargain. As Today reported in late May, XRP's holding between 1 to 10 million XRP tokens continued their accumulation binge. So we can see the smart money at the top is accumulating large amounts of XRP. Personally, I'm still apprehensive about adding it to my XRP position. Those of you who've listened to this channel and watched for a little while now will know that I've held XRP tokens since probably early 2017. And obviously there's been literally no return on investment from that at all over the last 5 years or so. So I'm still apprehensive while that SEC case is ongoing to pick up any more tokens. You could still see the price fall towards the downside. However, I truly believe in the project as a remittance issuer, if they can obviously win that case against the SEC. Very dependent on the outcome of that, unfortunately, which has kind of put the brakes on it. Some interesting news here that I wanted to quickly talk about is actually this Uganda's gold discovery and what it could mean for cryptocurrency. So is gold becoming inflationary? Can Bitcoin replace its store of value due to its scarcity and reliability? Are Uganda's numbers implausible? So what's actually happened? Well, what's happened is that the Ugandan government have basically said they have found huge gold deposits in the earth, which might net 320,000 metric tons of refined gold, which would be valued at today's prices just shy of $13 trillion. And the juxtaposition or comparison, I should say, that's being made at the moment, obviously, is you can't just go and find 21 million extra Bitcoins somewhere in the ether. It doesn't work that way because obviously it's been algorithmically set up for it to have a hard cap at 21 million coins of a supply limit. So every commodity in the world has looked good in a hyperinflationary environment, but the dirty secret is you can make more oil, you can make more silver, you can make more gold. Bitcoin's the only thing that looks like a commodity that is actually scarce and capped. So this is going and talking about how Bitcoin is one of the best, the truest inflationary hedges that one could have, because you cannot artificially change its price due to supply and demand, or you can't change it due to supply, I should say, from that perspective, not in terms of the actual core supply of those tokens. You can obviously manipulate supply and demand on exchanges, but there will only ever be 21 million tokens. Just to put this in perspective as well, so that 13 trillion potentially of refined ore that could be extracted from the ground, according to Uganda, would actually exceed the current market cap of gold already. So the estimated market cap of all the refined gold across the world is only 11.5 trillion. So you would effectively double gold's circulating supply if all of that ore was extracted. If you double the circulating supply, chances are you'll probably halve the price due to that shock. So it just goes to show how much of a hedge something can or cannot be, depending on how the supply can be manipulated. And this is why a lot of people are looking at Bitcoin in today's age as a hedge against inflation and other things like that. Flicking across, jump across again. So just talking about Web23.HBAR, obviously covered them in a recent video, but they've obviously come out and partnered with the HBAR Foundation, and they're now starting to ramp up some of their marketing materials. Vision is to now build, vision is big, and our new smart domains will make it happen. In the tokenized future, no domain will be left behind. So the idea being is them being a middleman between an NFT domain, which is blockchain only, and a regular domain, which is ICANN only. The smart domains combine Web 2 and Web 3.0. You're somewhere in the middle, tokenized, of course, on Hedera, and can be utilized in these different aspects, which is a really nice approach and not one we've actually seen yet. So you take the .ether domains, they're NFT only domains, and then you've got the regular ones you'll obviously be using all the time on Web 2.0, and this is a nice bridge. So again, bullish on that project. Some awesome news here as well from HashPack. So excited to share the updated roadmap for HashPack. The team are working hard to bring you some of the big features, including Android beta, which obviously many of you will be looking forward to. So a HashPack dedicated mobile application, something that the community have been calling for quite a while. Fiat off ramps as well, so sell and trade your HBAR for fiat and then take it off of the decentralized ecosystem back to some kind of bank or account that you hold elsewhere as an off-ramp. Staking, so in-wallet staking. I'm pretty sure as well this is a nod towards HIP 406 with that native staking that we've seen, with the potential in the future that any HBAR balance in a non-custodial wallet or an approved wallet can receive rewards directly from the network as being part of that. Token swapping as well, so in-wallet token swaps. So again, a really interesting and sort of big brain play from the team themselves. And then in the future as well, we've got cross-chain bridges, so HBAR to BTC and Ethereum. Obviously, we've got Hashport at the moment, but they're looking to do this. Apple iOS as a mobile application as well is in the future. And then Web3 gaming support, integrating gaming decentralized applications. So again, serious props to the HashPack team. Fantastic roadmap, and they've obviously delivered on 99.9%, if not all, of the previous features they were looking to implement. We can see there some of the latest ones that were completed. The USDC on-ramps, 2 of them, MoonPay and Banksa, and then Hash Connect as well, so smart contract support. And they are just continuing to develop this. Great to see as they help edge along the Hedera ecosystem. I wanted to just quickly mention this. Saw this Reddit article. We'll try and leave the actual video itself if any of you want to look at it, or you can search it yourself. But local Hedera networks are apparently a thing. They might have been for a little while, not something that I've seen previously. However, this is a video from an evangelist talking about how you can set up your own Hedera local network. And the reason this is obviously important as well is the path for adoption for developers needs to be as comprehensive as possible. So for example, some developers will need to run proof of concepts and trials outside of the testnet for their own purposes, in their own localized teams, in their own infrastructure, in order for themselves to audit the capabilities of the network, also to validate any source code and basically get it up and running as early as possible. Spinning up the network using containers easily is something Hedera must do in order to compete. It is quite a common requirement when providing network services. And not only network services, any type of software solution realistically needs to be able to be spun up in any type of these virtual machines or Docker containers, as that is a massive part of the sort of data pipeline and infrastructure for enterprises rolling out use cases for themselves. So again, it's great to see that. Right, let's wrap up the video and quickly look at Stader's V2 platform. So the wait is obviously over. You can now stake, unstake, and withdraw your HBAR from the platform. If I jump over across to the Stader website, the URL is obviously the same as you guys would know. First thing I'd note is I think it's logged a lot of people out from the application. So you want to come up to the top right-hand side, click on your wallet, click disconnect, and then reconnect it to your HashPack wallet. You won't lose anything from doing that. There's just a bit of a sort of connection issue between the two platforms, probably where they've migrated some of it across. So disconnect and reconnect your HashPack wallets, and your balances will load back through. What we can see on the platform now is we have 3 different tabs. You've got your stake tab, which we've all seen before. You've got your unstake tab, which is obviously new, and you've got your withdrawal tabs. Now, I'm not actually going to be withdrawing any of my HBARX from this platform at the moment because we are still sitting around the 40% APY. We've got the DEXs coming soon, and we can use these tokens in a liquid manner, one of the big benefits. And of course, we've still got high rewards throughout July. So there's no incentive for me to unstake. Some of you may want to do that for your own peace of mind. Fair be it. I'll quickly walk through how this is going to work. So very similar to how the stake feature would work here, you can punch in the amount of HBAR that you wish to unstake, or sorry, the amount of HBARX you wish to unstake. So here I've typed in 1000 HBAR, and we can see my output amount is 1098.4534. So that is my effective accrued rewards on that 1000 HBARX. So we can see an additional nearly 100 HBAR for me holding that across the period. We can also see there's going to be a nearly 3 HBAR fee down here. So make sure you're obviously doing as few transactions as possible. Obviously the fees are still incredibly minuscule, but it's still something to bear in mind. You're going to go ahead and click unstake once you've identified how much HBARX you want to unstake and convert back to HBAR. You then need to sign the transaction in your HashPack wallet. It's going to pop up asking you to sign the transaction. Nothing new there, exactly the same as we've done before when we were staking. What's then going to happen is the HBARs will go into a holding period, effectively an unbonding period, as it was told by the team on that interview. This unbonding period will last for 7 days. I believe it will probably appear potentially in this withdrawal window or somewhere around here. And then after that 7-day period, so 7 days after you press unstake on those HBARXs, you will then be able to click withdraw and withdraw that HBAR directly back to your HashPack wallet. So the unstake effectively converts the HBARX back to HBAR, and then after 7 days, you can withdraw back to your HashPack wallet. And as I mentioned in the previous video, as well as it was covered at length in the Stader interview, I suggest you guys check that out. There are very valid reasons for them having a 7-day unstaking and withdrawal phase. Nothing sort of unscrupulous is happening behind the scenes. Don't worry. Anyway, that wraps up this video. Hopefully you guys did enjoy. Leave a comment if you've got something to say. Always try and respond to as many of you as I possibly can. And until the next one, I'll catch you then. Cheers.